Good day, ladies and gentlemen. Today I want to teach you a strategy that is also known as the Falcon strategy. Okay, this strategy is simply a chart pattern based strategy. So if you're not good with your chart patterns, if you're poor at chart patterns, this might actually not be the best strategy for you. But if you want to execute it, you also need to probably just go and learn the basic chart patterns. Chart patterns like flag. Okay, flag. You have your flag. You have your triangle. You have your channels, all those kind of chart patterns that encloses price in a boundary. Okay, you have your channels, you have your wedges. Okay, so all the type of chart patterns are the ones you should go and learn. This has nothing to do with the head and shoulder chart pattern, double bottom, all those ones. No, that's not the type you should learn. You have to go and learn the ones that enclose price in a boundary: channels, wedges, bullish flag, bearish pennant, bullish pennant, all those kind of price actions. All the types of what's it called? Chart patterns rather. All the type of chart patterns. Those are the ones you should go and learn. Okay, they are basically of two types, different categories. You have those that are continuation chart patterns. You also have those that are reversal chart patterns. Okay. So once you've learned them, then you can come and apply this Falcon strategy. Now, what is this strategy all about? This strategy actually has to do with two things. The very first thing is the fact that price moves in an impulsive manner. Okay, price moves in an impulsive manner, and the second one is that after the impulsive move, there is always a correction. Okay, there's always a correction. So this is the ideology that the Falcon strategy is based on. Okay, after an impulsive move, there's correction, impulsive move again, correction, impulsive move, correction. Okay, so that's just the idea. So what you want to do is you want to draw a chart pattern around the correction phase. So that chart pattern will now give you an idea of where price could possibly go to based on the direction price broke out of. So if price should break out of the upper boundary, it tells you that price wants to go in the upward direction. If it breaks out of the lower boundary, it tells you that price wants to give you a selling opportunity. That's just the very, very basic strategy. Okay, so let me quickly give you a few examples. I want to give you a few examples. So let me get my trend line so I can draw a few chart patterns here. So look at this. This is a correction phase because price is not going up, neither is it going down. It's just bouncing around the range. So I'll just use these trend lines to draw out the range. Okay, so what's this looking like? This is looking like a falling wedge sort of. Okay, so you can see I simply tried to contain price within this is consolidation. That's just what I tried to do. In fact, if you don't even want to stress yourself trying to know the names of all the patterns, just find out where you have some form of consolidation, as if price is not deciding on a direction. That consolidation, draw out a boundary for it. It doesn't matter how it looks, it will surely fall under one type of chart pattern. It could be a flag, a pennant, whatever it is. You don't even need to know the name. Just draw out the boundary. Once you have drawn out the boundary of the consolidation phase, wait for price to break out in a particular direction. That gives you an idea of where price wants to go. Then you start looking for an opportunity to either buy or sell. Okay, as you can see right here, price broke out of the upper boundary. Okay, there was a retest and then price moved up, giving us an upwards movement. Okay, so basically that's just it. Right here also there's a form of consolidation taking place around here. Let me get my okay, so I can see form of consolidation around this region. Okay, so I have this, there's a consolidation around here. In fact, this is the way it should be, something of this nature. Okay, so this is looking like a triangle. Yeah, it's looking like a triangle. Okay, so this is like a triangle pattern. Good. So you just basically just draw out the boundary. Okay, you can see that it was as though price was moving around that range. Like it got to this point, came back here, bounced, got to this point, it was getting smaller and smaller, got to this point until it finally broke out, telling you that price still has intention of moving in the upward direction. You could have taken advantage of a buy position somewhere here, and price would have moved up, you know, giving you that opportunity. Okay, so basically anywhere you see some form of consolidation, you can just draw your chart pattern there and wait for price to break the boundary. Okay, so this is looking like you have something like this around here. Okay, can you see that? So once you've drawn, just make sure that what you are drawing is a boundary that price has respected in a certain way. Okay, you can see that at this point price came down from there, pushed up again. At the second point it came down from there, bounced off of this. So what that helps you to do is, in case price does not break out, there's a possibility of price still coming here, bouncing, coming here, bouncing, until it finally breaks out of the range that you have drawn. Okay, so it helps you gauge price, then you watch for a breakout, which is a possible opportunity to actually enter the market. Okay, so I think I have one more example around here. Let me just draw this. So you have this way. Okay, I can see that price was respecting that level at some point. This has to be bent a bit so I can have price touching it. Okay, so what do you have there? Price got to this point, bounced from there, came down, bounced, came up, bounced, came here, bounced again, then finally broke out, of which you would have taken a sell trade, and that would have given you a few pips in the downwards direction. Okay, so you would have caught the move from here to here. So basically this strategy is a very simple strategy. It's just about you understanding where to draw your boundary, where you see price consolidating and kind of respecting some kind of levels without actually moving impulsively in a certain direction. That's where you draw your boundary, and that is the consolidation or the correction phase. Then you're looking for the impulsive move that will break the structure, then you take advantage. Okay, so basically if you got any value, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.